Hey, Bitcoin wealth builders, Simon Dixon here, and welcome to episode 108 of Bitcoin Hard Talk. And we got a bit of a special one for you today. There has been a full-blown attack from the Proof of Weapons network on peaceful proof of work. And we're going to unmask all the evil players, all the people that may not be what they seem to be, so that you can understand how to analyze this. Now, this isn't about character assassinations. This isn't about anything else other than understanding the systemic nature of how the Proof of Weapons network uses their weapons. They weaponize technology. They weaponize media. They primarily weaponize financial weapons of mass destruction. And they also weaponize military. And we're going to be going through all the tools today to understand the different operations. But the overarching theme of what we're going to be covering today is we are going to be unmasking the Epstein Bitcoin theory. So there was an attack to try and associate Bitcoin with Jeffrey Epstein. And as with all things, we take a nuanced approach. We're not here to do propaganda. We're here to tell the truth, the whole truth, and nothing but the truth as I see it. And we're going to be going through, and I'm going to be sharing stories from the early days of Bitcoin and the early characters of Bitcoin that in fact did have a connection with Jeffrey Epstein. And we need to be honest about this, because in order to combat what they are throwing, the reality of the way they do this is there is 95% truth, and then they forget the 5% in there that completely changes the reality of it. So we're going to be covering all of that. And I'm going to be sharing stories today that I've never shared from the early days of Bitcoin. And in unmasking the Bitcoin theory, of course, we're going to turn this into the Jeffrey Epstein Bitcoin theory. We're going to turn this into an educational experience. So we're also going to be going through the JP Morgan links. If you're a long-term listener of Bitcoin Hard Talk, no surprise there. We have unearthed many of those. And also, of course, the Trump leverage game that's happening right now, so that you can stop subscribing to these stupid narratives of Democrats versus Republicans and fully understand what's happening at the level that they don't want you to see. So without further ado, let's jump straight into the first section. I'll cover all three that we're going to be doing. We're covering This Week in Bitcoin, which is answering the question, did Jeffrey Epstein fund Bitcoin, and were there attack vectors that we should be aware of with the Bitcoin core developers? We're going to be answering that question. In part two, we're going to be covering This Week in Macro. And what I want you to understand is the framework by which the Proof of Weapons network weaponizes these blackmail operations and criminal networks like Jeffrey Epstein in order to influence the macro market and create manipulation and vasilization of public companies using both the equity and debt capital markets, with some live case studies in what happened this week that I covered last week, but the updates since in terms of strategy, JP Morgan, and the other financial weapons of mass destruction that are under current operations to vassalize those companies in order to fear you into selling your Bitcoin. In part three, we're going to be doing This Week in Geopolitics. And this way, I'm going to be going through everything that has happened with the email leaks, the previous operations. We're going to go through Trump's history, his connections to the network, so that we can understand what it actually means and the geopolitical implications that I've been covering a lot. So without further ado, let's jump straight into This Week in Bitcoin. Did Jeffrey Epstein fund Bitcoin? Now, what I want to do is do a little bit of a recap. So remember, we went through in previous episodes all these different attack vectors. So Bitcoin is always under a state of attack. And we saw three of the operations that we have been covering in previous episodes, but we got to see them live this week. So the first attack was the big reveal. There was media that was weaponized in order to demonstrate some connections between some of the core developers in Bitcoin Core, while simultaneously weaponizing other nodes in the Proof of Weapons network that are wolf in sheep's clothing, like Barry Silbert, in order to do a PR campaign for Zcash simultaneously. We'll go through that and the stories that nobody knows. There was also a second attack this week, And that was a full-blown vassalization strategy on strategy. MicroStrategy, MSTR, and the financial weapons of mass destruction that have been constructed around it in order to push Saylor into full submission, while it looks like he's taking on the establishment JP Morgan. And there was a massive PR campaign with some of the other nodes that may not know whose agenda they're serving. We're going to go through that, everything that happened since last week. Attack Vector 3 was a further vassalization of Tether. Now, that doesn't require much vassalization because obviously it is connected deeply to the fiat currency proof of weapons network and providing much of the financial weapons of mass destruction, backing it in order to roll over the debt cycle in the US through fiscal dominance. But we're going to be going through all of those and highlighting them so that you can see through all the narrative, all the shit that's being put out there, and just have the understanding of what's really happening. So as a reminder, Bitcoin is always under a constant state of attack. What is Bitcoin? You got to understand it in order to not see through the, see through the noise and the narrative. So what is Bitcoin? Firstly, it is open source code. That means anybody that wants to look at the code can look at the code, and everybody does look at the code. And if you want to improve the code, you put forward Bitcoin improvement proposals. And there is a network of developers as well as competing developers as we go into this chaotic open source boardroom where we debate the future of Bitcoin. Now, just because developers want to change something, you still got to get buy-in from the miners. Now, the miners are the ones that are adding blocks to the blockchain. We package up all the transactions every 10 minutes. And because we don't want any central bank or any bank in the middle, the miners agree and reach consensus, and they solve these mass problems. One that solves the problem fastest gets a block reward plus a bunch of transaction fees that subsidize the network. And that network is now the largest distributed supercomputer in the world. Now, they can signal whether they agree with changes in the code. And when they do a signal out there, it has to reach a certain activation point. Once it hits a certain activation point, they then have to actually run the code. But then at the same time, they're just simply adding blocks to the blockchain. Now, if you run your own self-custody Bitcoin, you can also run a node, and miners also run nodes, but anybody can run a node. The last time we were in a major Bitcoin war was the block war debate. In the block war debate, it was determined that if you make the blocks too large in order to reduce the transaction fees, then you might end up with only rich people being able to run those nodes. On the flip side, if you have higher fees with smaller blocks, then you can have more people running those nodes. Now, there are things like SPV software, various other things. I don't want to get geeky because I want you to understand the high-level game theory. But those nodes, the more nodes we have, the more of a resistance we have against the miners. The miners are investing significant capital. So the miners are always subjected to receiving capital. And when they receive capital, that subjects them to the whims of their shareholders in those companies. There are private companies, large ones like Tether, and there are public companies, a lot of those in Texas that are public on the New York Stock Exchange and NASDAQ. And then there are state sovereigns that are also mining. And all of these different actors make up the total hash power. The hash power is what secures the network, that makes it impossible for any central bank, sovereign state, bank, or any actor to take down the network because these miners are distributed all around the world. You know, we used to have about 60% of the hash power in China. About 40% of that moved over to America through these public companies. 20% remains there. We have about 11% in Russia, 2 to 6% in Iran and various other countries. You have a lot across Europe, across the global south, across Africa, across Central and South America. And it is distributed across Asia as well in order to ensure that no one country centralizes too much of that Bitcoin. Now, the largest player used to be China. Now it's America. And we need to keep an eye of that. because the proof of weapons network is hosted. The host country is the United States of America via the US stock market, and BlackRock, State Street, and Vanguard, and the asset managers that pull together all of the American pension money, endowment funds, and various other funds. So what is the nodes? Well, they can essentially process transactions. And if they don't want to process transactions because they believe, for example, a bunch of companies are getting together and colluding to work with the developers and the miners, then we have something called a user-activated soft fork. And this was the resistance that was used against the miners during the block war debate, because the developers couldn't agree with the miners. And so a lot of venture capitalists were colluding via Barry Silbert and other people that were investing in all the Bitcoin mining companies and trying to enforce changes across it. So that is what Bitcoin is. With that in mind, you know that there are no back doors, but there are choke points. And we need to understand those choke points, because those choke points are always under attack. But it is the largest and most distributed supercomputer and the most distributed supercomputer that we have in the world. And it's the best that we have. Nothing else in the crypto market competes with it. It's all an iteration of a pre-mined shitcoin connected with somebody else with Silicon Valley funding and various other 51% attack vectors, because it doesn't have enough hash power, or it's got proof of stake, which means that whoever accumulates the most coins can govern the network, or it's a fork of Bitcoin where a few players funded the mining operation and they're centralized in some deep state dark actors. And I'm going to be going through some of the history of that so that you can understand it. Now, what I want to do very quickly is a quick reminder. This is best understood if you have already watched my big 3-hour marathon that I did on whether the CIA created Bitcoin. Now, just to bring you up to speed, I created a 5-minute whiteboard AI summary of that 3-hour marathon. And I'm going to play that for you right now, just in case you don't have time to go back and watch it. I would love for you to go back and watch it. You can go to simondixon.com, or you can go to Bitcoin Hard Talk on Apple Podcasts or Spotify, or you can go to YouTube, type in Simon Dixon, CIA, and you'll find that video over there. But what I'm going to do quickly is I'm going to share my screen and make sure we are all on the same page, because we're going to build upon that understanding, our understanding of what Bitcoin is and how it's constantly under attack, so that you can make better decisions. And then I'm going to go through some stories of the Jeffrey Epstein side, where it was funded, what it is funded, what the attack vectors are, and some stories that you may never have heard from my early days of investing in many of the companies in this sector. So let's jump right in with the first video. And this is going to be about 5 minutes, whiteboard summary of the CIA video.
All right, so today we're diving into a theory that's been absolutely blowing up the crypto space. It comes from a nearly 3-hour-long podcast episode hosted by the one and only Simon Dixon, a true Bitcoin OG, on his show Bitcoin Hard Talk. Yeah, so just a little while ago, on October 24th, 2025, this massive episode dropped, and it went viral almost immediately. And it was all about trying to answer a question that just keeps coming up. Specifically, this one wild theory about who really created Bitcoin. And when I say wild, I mean, we're talking about a story that pulls in international spies, the mob. I mean, it's a real rabbit hole. And the original episode, it clocked in at just under 3 hours. 2 hours and 54 minutes, to be exact. I mean, who has that kind of time? Well, that's where we come in. We watch the whole thing, so you don't have to. We're going to break down that entire sprawling theory for you in just 5 minutes. So, you ready? Here's the TLDR. Let's get into it. So, the whole reason this became a huge deal is because of comments just like this one. You hear people, even pretty big names, saying things like, I won't buy Bitcoin because I believe it was created by the CIA. And look, when you hear that, it kind of makes you nervous, right? So Simon Dixon's podcast really set out to investigate, is there any fire behind all this smoke? Okay, let's get into the first clue. And believe it or not, the theory starts with the name itself. So the podcast brings up this idea from a guy named Richard Warner. He points out that in Japanese, you say the family name first, so it would be Nakamoto Satoshi. And if you break that down, Nakamoto can translate to center origin, and Satoshi, that can mean intelligence. So you put them together, and what do you get? Central intelligence. Kind of spooky, right? So the question is, was this some kind of clever wink and a nod from an intelligence agency? A clue left behind, just hiding in plain sight for anyone who bothered to look. Okay, but that leads to the next big question, the motive. I mean, why on earth would a government agency create a decentralized currency? It seems totally counterintuitive. Well, the podcast dives into two pretty compelling and honestly kind of chilling potential reasons. First, there's the gateway drug theory. The idea is that Bitcoin was just a trial balloon, a way to get us all comfortable with the idea of digital money before they roll out their own stuff, central bank digital currencies, or CBDCs, which they would totally control. The second theory is, well, it's a lot darker. It's the honeypot theory. That Bitcoin was designed to get everyone to pour their money into it, only for the creators to flip a switch on a secret back door and seize it all. But here's where the story gets really, really weird. Just when you think it's all about spies and government agencies, the podcast takes a massive left turn. It suggests a deeper, darker origin story that doesn't start with the CIA, it starts with the mob. Yeah, you heard that right. The theory centers on this one guy, Meyer Lansky. If you don't know the name, he was basically the financial genius for the criminal underworld, an absolute savant when it came to moving money and building systems. And the secret history they lay out is just incredible. The theory goes that by the 1960s, Lansky's network had pretty much compromised the entire Federal Reserve. The famous Nixon shock in '71, when the US went off the gold standard, the podcast alleges that was a direct response, a desperate move to wrestle back control. And in retaliation, Lansky's network supposedly funded the very first private digital currency, something called DigiCash. So, okay, let's pause there. If that was the original plan, a private, centralized digital currency controlled by this shadow network, then how in the world did we end up with the public, decentralized Bitcoin that we all know today? What happened? Well, this is the crucial plot twist. The theory is that the project's code went open source. The moment that happened, the original creators completely lost control. And a whole new generation of cryptographers and privacy advocates, the cypherpunks, they jumped on it and took over. And this crazy chain of events, from mob money to these cypherpunk idealists, is what leads the podcast to its final suspect for who Satoshi really was. A man named Len Sassaman. He was a brilliant cryptographer, a key figure in that early cypherpunk movement, and a passionate advocate for internet privacy. And when you look at the tail of the tape, it's pretty compelling. Satoshi's very academic writing style, it lines up perfectly with Sassaman, who was a PhD student. Satoshi posting at weird hours for the US, but normal for Europe, and using British spellings. Well, Sassaman was an American living in Belgium. But here's the kicker, the potential smoking gun. His PhD supervisor was David Sham, the guy who founded DigiCash. I mean, it's a pretty compelling case, right? But this is where the podcast wraps up by asking what might be the most important question of all. Even if any of this is true, does it actually matter? Because here's the thing, the crucial point is that whatever the original plan might have been, a centralized closed source system with a secret backdoor, that's not what Bitcoin became. The moment it went open source, it morphed into the complete opposite of that. Decentralized, open source, no backdoor possible, controlled by no one. And this quote from Mark Yusko, who was on the podcast, really hits the nail on the head. He says, "The beauty of the system is that it is anonymous. One guy can't show up and change that." Basically, the way Bitcoin is designed makes the creator's identity and whatever their original plan was almost completely irrelevant. And that's really Bitcoin's core defense, right? The code is open source. You, me, anyone can go look at it right now. The network is spread out all over the world on thousands of computers. There's no single point of failure. You can't just shut down a headquarters or lean on a CEO. To change anything major, you need to get the majority of users to agree. Good luck with that. Which brings us to the final question, the one to really chew on. This whole origin story is a fascinating rabbit hole for sure. Spies, mobsters, brilliant cryptographers. But at the end of the day, in a system that's built on transparent, open code that's controlled by no one, does the ghost in the machine really change anything at all?
And of course, the answer is no. So that was from what I did in that podcast is I went through a bunch of different videos and theories. And that was with Uncle Jack. Many people asked if we could do a podcast together. I think it would be worth doing that at some point. Let me know in the comments section whether you'd like to actually see that as well. But I wanted to just lay that foundation to make sure that this is not manipulated, because many people just don't understand how Bitcoin works and think that there's some kind of backdoor or something like that. Because now we're going to go through many of the attacks that we saw this week. And my overarching theory is, and by the way, when we talk about Len, I think other people were involved as well. So you might want to watch the whole episode to get my full thoughts on that as well. But I want you to make sure that my overarching theory here is that it is the gateway drug theory rather than the honeypot. And the gateway drug theory means that this was a mechanism and there was a resistance to open source it in order to get people used to transacting online and then transition to the stablecoin central bank digital currency standard that we're on, which is why I preach and try and help people understand who's part of the network, whose agenda are different players on. Because when you're listening to people, you may not know, and they may not know who they're actually working for, because these are all covert operations as well. So let's have a look at some of the attacks and how I interpret them from a proof of weapons network and from my belief that they are trying to get you into the gateway drug of stablecoins and central bank digital currencies and centralizing Bitcoin into Wall Street and financial industrial complex wrappers. So attack vector 1. It was posted that Jeffrey Epstein was funding Bitcoin core developers. And so I want to go through the history that many people may not know of how Bitcoin developers were funded. So obviously you had the very, very beginning, and you had the group that were involved with Satoshi Nakamoto. We gave some theories of who they are, many of whom are no longer with us today, whether it be the Hal Finneys and the others that we covered as well. You can go back to that video. But anyway, they bootstrapped the network, they open sourced the network, and they were the first to mine it. What that means is that they fare with anyone else. They were the first to know. They launched it on the Cypherpunk mailing list and said anyone can mine it once it was built in January 2009. The white paper was released in 2008. Then there was, the network was there. People could fire up their laptop and they could mine some Bitcoin. People used to receive for very little electricity, and just by having a laptop with CPU power, 50 Bitcoin every 10 minutes in order to bootstrap the network. And then more and more people would start mining. And the more and more people that were mining, then you ended up where it's more difficult to mine. And so therefore, the early Bitcoins were mined by the first miners on the network or from their laptop. And then eventually it went to graphics cards and GPUs. And then eventually China and various other companies across Europe and China created the first ASICs, which are specialist mining equipment that could mine faster than any other CPU or GPU. But one of the, where were the developers actually funded? Well, originally it was just a bunch of people that would pull their money together. They would have a Bitcoin wallet address and people could contribute Bitcoin. And some of the early developers would just be funded through donations and contributions. Now, when I joined round about 2011, after writing the first published book in 2010 that was launched later, I spoke at the first Bitcoin conference, and Max Kaiser, a journalist on RT, and myself invested in a company called BitPay. And now BitPay started to use some of its funding because it was trying to create like a PayPal or Bitcoin where you could accept Bitcoin, then you would receive fiat currency to make it easy for merchants. It started allocating some of its revenue to some of the early developers. And so this became corporate interest. Now, why would somebody do that? Why would a company do that? Well, they obviously have an agenda, because as you take on investors, you work for your shareholders. And as you become a more professional company, you have a board of executives rather than just one entrepreneur. And then you have a board that's normally from your shareholders. And that gives oversight to the executives, and the board works and represents the shareholders. And so the shareholders then could manipulate or influence where they wanted Bitcoin development to go, because the money was coming from essentially the shareholders' value. And so that's a problem. And so the next idea was that there would be a foundation. And a foundation was set up called the Bitcoin Foundation. And this was basically funded. And one of their first missions was to work with kind of PR issues, but also to fund developers. Now, this was more of a decentralized group of interested companies. And so you had early companies that would be interested in supporting Bitcoin. And so rather than just one company like BitPay, you would have multiple companies that would all contribute to a foundation. And then the foundation would have a governance document and a mission statement. But the Bitcoiners really started to go and unearth many of the members that were part of the Bitcoin Foundation. So it then became more decentralized. So originally it was the creators, then it was corporations, now it was a foundation. And who was a member of some of those foundations? Well, one of them, in order to follow the money and understand that Bitcoin has always been under attack, you can start to look at what happened to some of those early members. One of them, and again, I'll just share you stories from my perspective of being around many of these characters in the early days and investing in many of the companies to try and support the industry. As the value of Bitcoin grew, I would share it out around the ecosystem to fund developers, fund companies, and try and turn this into something. One of them was a guy called Charlie Shrem. Now, Charlie Shrem was later arrested after joining the Bitcoin Foundation. He created a company called BitInstant. If you type in my name, Charlie Shrem, you'll see me on some of his podcasts from back in the day. But he was arrested on his way to Bitcoin Miami conference, because through his company that was connected to an exchange called Mt. Gox, you were able to take some of those funds and use them in some of the dark web marketplaces that people were using them. The most famous at the time was called Silk Road. And so when you are a centralized company, you have to comply with anti-money laundering regulations, KYC regulations, Bank Secrecy Act, and all sorts of stuff. You can no longer be a missionary player. You have to submit to what you have to do as a fiduciary duty to your shareholders. Now, Bitcoin regulations, was it money? Wasn't it money? One of the early court cases was a guy called Trendon Shavers who created a Ponzi scheme, and it was determined through his lawyer. I think he was represented by a guy called Jason Seibert, if I remember correctly. And he got it where it was determined in court that Bitcoin is money. So now we knew that Bitcoin was money as classified in court via a Ponzi scheme, and it had nothing to do with Bitcoin. It was a Ponzi scheme of somebody that used Bitcoin in order to try and draw in investors, started paying those investors from future returns, and therefore we had the classic definition. Now, he went to prison. Charlie Shrem got determined that you have to actually have a money transmitter license. So now these companies have to bow down to the agenda. But Bitcoin still remains Bitcoin because there's no door to knock on. There's no executive to arrest. There's nobody to blackmail. There's no one to engage in this. So you start looking at the attack vectors. Now, Charlie Shrem was put down in prison for engaging in what he pleaded guilty to money laundering, because people used his platform in order to purchase, purchase drugs on the dark website via an exchange called Mt. Gox. Now, Mt. Gox had a member on the Bitcoin Foundation that was a French guy that lived in Japan called Mark Capellis. Now, Mark Capellis, he bought Mt. Gox. He didn't create Mt. Gox. And he bought it, and it was missing when he purchased it 80,000 Bitcoin. Now, he didn't know when he purchased the exchange that it was missing 80,000 Bitcoin. And so he later went back to the person that he purchased it from and said, where is the 80,000 Bitcoin that we owe to our customers? Because what happens when you create an exchange? You create fractional reserve Bitcoin. You create paper representatives. People that thought they had Bitcoin on Mt. Gox, in fact, had an IOU, which is a centralized database. Now, the underlying Bitcoin, you cannot fractionally reserve. But once you put it in an exchange, you create paper Bitcoin. So who did Mark Capellis buy this exchange from? Well, he bought it from a guy called Jeb McCaleb. Who's Jeb McCaleb? He was the creator of a token called XRP, who essentially took that token and sold it to a bunch of companies or a company that was part of the banking network. And so the bank started creating competition to Swift and ended up with approximately 60% of this XRP token in a company called Ripple Labs. Full disclosure, I was investing in fintech at the time, and Ripple Labs was one of the companies I later invested in. Over time, I didn't want to support the banking system. And so whenever I can exit those shares, I exit those shares. I've been cleansing myself of these shares because I want to remain independent. I don't want to have to bow down to a shareholder's agenda. But obviously, the shareholders can influence the companies when you understand corporate governance. Who else was involved in that network? A guy called John Matonis. So look at this right now. You had an attack vector on money laundering regulations. You had an attack vector on also via John Matonis. Now, John Matonis, what did he do later? Well, later, although he was part of the Bitcoin Foundation and the chairman of the foundation, he brought somebody into our community. And whether he brought him in or whether he was fooled or whether he was blackmailed or whatever, I don't know. All I know is I'm following the incentives, where he later brought somebody to the community that claimed to be Satoshi Nakamoto. His name was Dr. Craig Wright. And so what did they end up creating shortly after? A hard fork and a different version of Bitcoin. So this led us to the block war debates, because essentially, Craig Wright was a psyop that was injected into the ecosystem in order to create alternative versions. Now, he created a hard fork in partnership with some of the miners in China called Bitcoin Cash. And so by partnering with these Chinese miners who had created the ASICs, and they were using their ASIC machines in order to mine Bitcoin faster than the GPUs and CPUs, you ended up with an attack vector where people and some of the early developers, a guy like Mike Hearn, had a hissy fit saying Bitcoin is too centralized in China. He sold all of his Bitcoin, I think at about $100 or so, saying that the project has failed because of this. And so then the miners colluded, and they started to say, well, we don't want what the developers are doing. The developers, we want them to increase the block size. We want to work with various companies, and you had this decentralized boardroom debate. I remember when I was at Hong Kong, when the Hong Kong agreement was signed between the miners and the developers, and the roadmap was set. But just because it was signed in a shadowy boardroom, it became out in public. It went onto the forums and everyone started to debate it. And people started to say, we don't want the future of Bitcoin to be determined between the miners and the core developers and a bunch of influential venture capitalists. And so they didn't get their way. But there was an attack vector sent in called Dr. Craig Wright, who pretended he was Bitcoin creator. He pretended he was Satoshi Nakamoto. And he got one of the core developers that had previously met with the CIA, but when Satoshi Nakamoto left the project, in order to endorse him and say, I saw that he controlled the Satoshi wallet keys. Turned out that he didn't control the Satoshi wallet keys. In fact, Gavin Andreessen, one of the developers that ended up joining with Bitcoin Cash, with the Chinese miners as well, ended up leaving development. And there was a whole story around control of the GitHub repo, which is the open source developer community where all the code is hosted. Now, one of the early investors, when I was investing in many of the companies, blockchain.com, later Coinbase, Shapeshift, various others with early Bitcoiners as well, Circle, which later launched USDC, all of these companies started as Bitcoin companies, but because they were under a corporate wrapper, they needed to maximize shareholder value and receive VC funding. So the VCs in Silicon Valley were able to influence. When I was investing, it was just us Bitcoiners that were on a mission to take on the banks and make sure that it remained decentralized. So now, via these companies, what happens? All of these companies maximizing shareholder returns would launch shitcoins, get into stable coins, go into all sorts of other stuff in order to maximize the revenue for those corporate entities. Now, it supports the growth of Bitcoin, but people need to be aware of the attack vectors. Now, one of the influential investors at the time was a guy called Roger Ver. He was at the time the biggest investor. Myself and Bank to the Future were investing in many of the different companies. But he was, again, an early supporter of Bitcoin Cash. Now, what I am saying here is that many times you don't know what a corporate agenda is doing, and you don't know what these people are connected and affiliated with. And half the time, they don't know who they're working for. Now, what happened with Roger Ver recently? He was arrested in Spain for what was called tax evasion. And that tax evasion from the early days of Bitcoin was because he put some Bitcoin in a corporate wrapper. And maybe that was held over Roger Ver. I don't know. I'm not making any accusations. I'm just saying that there is constant attacks under this network, which is why we created the mantra in Bitcoin, don't trust, verify, because we don't want any central point of failure like all the other crypto projects that can be hijacked, can be taken over, and all these different things. So what happened to Gavin Andresen? Well, he went and met with the CIA. The CIA had wanted a meeting in terms of what is Bitcoin. He was handed the project by Satoshi Nakamoto. And as soon as he found out that Gavin Andresen went to the CIA, Satoshi Nakamoto left the project. And at the same time, it was utilized on WikiLeaks by Julian Assange because WikiLeaks was being attacked and taken down by the banking system, Visa, MasterCard, Bank of America. What is the financial choke points that happen here? That's what they're doing right now. They're taking people that had that are involved in the community and saying, we'll take out your bank account. What happens next? They're partnering with other players that are compromised into the proof of weapons network. All of these attack vectors constantly happen. And so it was Gavin Andresen and Craig Wright with Roger Ver that supported Bitcoin Cash, which was the next attack and a hard fork. Now, later they attacked Bitcoin Cash and went into Bitcoin SV. And then we had, different other players like Calvin Ayre, who has a very bad background, but was also investing in a ginormous mining farm and became probably the only miner for Bitcoin SV. And they both went through 51% attacks because nothing had the hash power like Bitcoin did as well. Now, another controversial character that was part of the Bitcoin Foundation. So you had all these people was Brock Pierce. Now, Brock Pierce, he basically, I remember I was at a conference. Where was it? I can't even remember. I think it was Mexico, or maybe it was one of Bruce Fenton's early conference, Satoshi Roundtable. And I remember he was zonked out telling me for hours and hours and hours why he knew that Craig Wright was Satoshi Nakamoto and tried to persuade me and bring me onto that. Now, he was investing in a lot of the companies. At this point, I was deciding that the more and more investments you make, the more and more people try and compromise you into these attack vectors. Now, I'm not saying anything about, Brock Pierce. This is all public information. But if you look up on the internet, Brock Pierce, you'll notice that there were allegations and settlements around sexual crimes. He was somebody that was involved in Silicon Valley. He created a video streaming site. He was a child actor involved in the Hollywood industry. And later it turned out that he actually, on the public record, met with Jeffrey Epstein. And this is what was revealed in some of these allegations as well. So you know how these things work. They want, and I'm going to cover this in the macro and geopolitical section, the idea of these sexual blackmail networks is to compromise everybody that they can try and influence. And so whether it happened, whether it's not, that's not my, that's not my thing to judge here. My judge here is that you can see the attack vectors around everybody that was involved, because there was a very deliberate strategy to try and attack some of these people and get them in the network. Now, what did Brock Pierce do? Well, he was investing in the industry. He created a venture capital fund with partners called Blockchain Capital that was trying to acquire all the different companies in the industry. He also invested in a project that later turned into Tether. And he sold that project to Bitfinex. And Bitfinex was one of the exchanges that came from one of the big hacked exchanges. God, I forget the name of the exchanges now. I've forgotten the name of it now. It will come back to me later. Well, anyway, they bought the code, and later they launched the project Tether. Now, Tether was called something else when it was originally purchased. If I remember correctly, True USD or something like that. But it was a way of getting money between all these different exchanges so you could arbitrage. Now, what have we got here? Brock Pierce created what later became Tether. Tether was sold to Bitfinex. Stablecoins were invented as a mechanism. Remember what I said, the original theory, gateway drug theory. And what is stablecoins now? It's the precursor and the privatized version of a central bank digital currency. Again, I'm not saying that all these people were coordinated. I am saying that there are operations to compromise different parts of the ecosystem. Now, what happened with Bitfinex? It was weaponized by the CFTC. A bunch of money was seized in the banking sector, which removed those reserves. They ended up having to, and there was an attack on the exchange. 17,000 Bitcoins were hacked from that exchange via these covert operations. Now, I was one of the people that had became a shareholder in Bitfinex because we put together a recovery plan that meant that Bitfinex didn't need to go into Chapter 11 bankruptcy. And so we pulled together all the people that were going to lose all their money, and the lawyers would have stolen all their money like they did for Celsius, BlockFi, FTX, all the others. And instead, we gave them a Bitcoin token that represented the claim that made them a shareholder in Bitfinex. I became one of those shareholders. We ended up owning 40% of the company, and it recovered, and it didn't need to go into Chapter 11. But the goal of that hack was to send Bitfinex into Chapter 11 at the same time as having these other things that happened. So you had the weaponization of regulators, the weaponization of banks and financial censorship, and you had covert hacking operations. I don't want to go too deep into that. But after all of these controversies around the members of Bitcoin Foundation, you had arrests, you had all these people that were compromised, you had Brock Pierce, all these other things. The Bitcoin Foundation was completely demoralized, it completely, the community had enough of it. And so it stopped funding the Bitcoin core developers. What did they do? They wanted to exert a handover of how to fund these different developers, as the project now was about 2015, and we were turning into a multi-billion-dollar project at this time. So in 2015, MIT, the college, basically funded some of the Bitcoin developers via a subset called Digital Currency Institute or something, I think it was called. They launched a side project. So MIT had an innovation lab, as it were, with these NGOs and different networks. And then they funded a project called DCI, Digital Currency, I think it was, initiative. Maybe people in the comments can say whether I got this right. It's been a while. This was 10 years ago. And so the Bitcoin developers had MIT funding that went into DCI, and DCI took a subset of their funding and started supporting some of the Bitcoin core developers. Now, you see why it's very important for us to have this open source code with a network of developers with competing implementations. I'm going into the basics. There were more stories with competing implementations as well. But what is it that it was released recently? It was released old news. What was that old news? That MIT had some funding from Jeffrey Epstein, and Jeffrey Epstein started commenting around 2017 on crypto and started speaking with various other influential people in the Trump administration around, supporting crypto and tax legislation. So MIT launched DCI. DCI funded some of the Bitcoin core developers, and then we had the next phase of funding these developers. Others would raise finance, put up a Bitcoin QR code, and people could contribute to the developers where they wanted some of the Bitcoin improvement proposals to go through. Now, what happened after that? Well, a company that was founded by Adam Back, who was mentioned in the white paper and was a part of the cypherpunk movement, he then raised a bunch of money and created a corporate wrapper. And that corporate wrapper was a company called Blockstream. And that company called Blockstream brought with it a bunch of the developers. And they used the Bitcoin treasury strategy, the same one we were using at Bank to the Future, because we didn't get any Silicon Valley money because we held Bitcoin on our balance sheet. And we didn't go public or do any of the things that the other companies did because we held Bitcoin on our balance sheet. And we didn't do what Saylor's doing, where you raise money from corporate debt investors and institutional investors so that they can then determine the future of the strategy of the company. And so Blockstream basically funded a bunch of Bitcoin developers, but it raised finance from a bunch of other types of investors. Who were some of their investors? One of them was Blockchain Capital. Blockchain Capital was part of Brock Pierce's network to invest. One of the others was Bitfinex. Another one was a company called AXA Ventures. And then people start to look at, well, who are AXA Ventures? So you can start looking through the history and you'll realize that one of the CEOs of AXA was Hen de Castres, who's basically a member of a Bilderberg group, and many others that would meet. And so you had a company that was in the midst of the block war debate, and we had people try to take it over, determine the influence of the code, but the decentralized nature of the network meant that even when the users didn't like it, the node operators were able to run a threat of a user-activated soft fork. I remember the day it actually got activated, which was a different, an upgrade in the code to increase the block size without needing a hard fork. I don't want to get geeky into it. It was called segregated witness. And Barry Silbert, who was from Digital Currency Group, the one that went into, basically created Grayscale and all the other things that created the recent crash in 2021. I don't want to go too deep into that. Barry Silbert at Digital Currency Group tried to consolidate all the companies in order to get a block size increase plus the addition to the code. And that was the big block war. So you can look through that. Then many people were saying, we don't want Blockstream to be funding core developers. So some of those developers went away from Blockstream. You had Luke Dash Jr., various others. And they started to invest and build their own initiatives. So what we're saying here is that this is always under attack. And the point of Bitcoin is we have this open source boardroom where we expose all these things. Now, what was the next attack vector? Well, Cantor Fitzgerald. Cantor Fitzgerald, created by Howard Lutnick, as deep state as it gets. And what would he do? He would go along. He's now in the Trump administration as the Commerce Secretary. And he would solve Tether's issue. He would start to back it by treasuries, become influential into the Biden administration and the Trump administration, and allow Tether to custody its backing of its stablecoin, which is US treasuries, and now become the 17th largest lender to the US government. So now it's strategically important as we are in this fiscal dominance stage and the debt is being rolled over. Now, what else did Cantor Fitzgerald do? Well, they started going out to as many influential people in Bitcoin and say, hey, why don't we create a Bitcoin treasury company? Why don't we also allow for Bitcoin-backed loans? Why don't we mine some fiat currency because they're connected into the Federal Reserve primary dealer network, and they buy these bonds and they're a buyer of last resort while influencing policy to push rates down at the moment in the Trump administration. But anyway, prior to that, he would go around and try and take as many companies public, create all these different Bitcoin treasury companies, and he'd go to Adam Back and say, right, you're now vassalized into the Blockstream network. Why don't you start promoting stablecoins? Or why don't you start creating Bitcoin treasury companies? And so Adam Back, originally a cypherpunk, is now promoting shares in a company with questionable shareholders, launching or promoting the stablecoins, and also launching Bitcoin treasury companies. And so this is the process of vassalization that I always talk about. The financial industrial complex uses their financial weapons of mass destruction in order to bring people into that governance structure where you are no longer sovereign, which is what Bitcoin was here to create. It was here to create the ability for you to own your own money, spend your own money, and have a network that can't be printed. No derivatives printing, no stock printing, no crypto printing, no stablecoin printing, no bond printing, no dollar printing, no fiat printing. But everyone gets vassalized through this financial industrial complex. So Adam Back created a Bitcoin treasury company. Luke Dash Jr. created recently a competing implementation of software that can be run on nodes called Bitcoin Knots, and it creates a resistance. And so we have those open source boardroom debates as well. And we have constant attack, just like this. And I'm only entering into a small part of the history of what got us here to the point where we are this $2.3 trillion network backed by the most amount of hash power, the largest distributed supercomputer with attack after attack after attack. And so what is Bitcoin? I remind you, open source code on a distributed supercomputer where transactions are processed on anybody that wants to run a node. And users can resist through user-activated soft forks. And one of those resistance, as I said, came when we needed to resist against Barry Silbert that tried to create SegWit 2x. And what did he do? He invested in a company called Zcash. And Zcash, which was using zero-knowledge proof technology that was mainly innovated at Tel Aviv University, that relied upon 6 developers, one of them a Bitcoin developer called Peter Todd, that recently was accused of being Satoshi in a documentary, another attack vector. Now, that Peter Todd, we had to rely upon him destroying his key in Zcash. And there was a centralized company that was launched alongside Zcash that charged a tax on all the different Zcash that were mined into a centralized company. That centralized company now needs to deal with regulators. And it relied upon code. It may have changed later. I didn't continue to follow the project. But you had to rely upon a promise from Peter Todd and other people that you need the keys, the original keys were destroyed. in a network where there is zero knowledge transactions, but you can't even check them on the blockchain. So what happened recently? We had an attack. The attack was, let's push Zcash. Barry Silbert goes on TV. The network of ETFs that wrap around Zcash were launched. You had that centralized company that has to go through the compliance, and everyone goes on TV and says Zcash is the future, at the same time as connecting Bitcoin to Jeffrey Epstein, giving half-truths so that people would sell their Bitcoin while simultaneously launching a second attack at the same time by the financial industrial complex through their new tool, which is called Strategy. Strategy, MSTR, that everybody says is the one that's bringing all this new adoption into Bitcoin, is creating a Wall Street wrapper that centralizes as much Bitcoin as possible. And because he is very, very good at pitching what Bitcoin is and saying how fiat currency is going to zero and that Bitcoin goes up, and therefore, what should you do? Borrow fiat currency to buy Bitcoin. And once you have that Bitcoin, use it as collateral and borrow against it again. And if you don't have access to that credit, I'll create a company that gets as much Bitcoin as possible, issues debt, and therefore I can just do it for you and you can buy my shares. And through this mechanism, the more that I borrow, the more shares I sell, the more subservient it becomes to the financial industrial complex. And so through this mechanism, there is approximately 650,000 Bitcoins, which is about 3% of the supply in a public company. That public company has shareholders. And so you have a vehicle that looks like a resistance, but is actually giving more and more power to the proof of weapons network and the financial industrial complex. So how are we doing at Strategy? Well, it owns 650,000 Bitcoin. It has $54 million of cash, and it has committed to $700 million of annual obligations, which means that it doesn't have enough cash to pay its obligations on the products that it recently launched. And it has promises to corporate debt investors, to hedge fund operators like Jane Street, to its shareholders like Vanguard and the longer term investors, the equity investors, as well as the debt investors. And so all of these different financial weapons of mass destruction are used in order to make Michael Saylor, via its corporate entity Strategy, submit to its shareholders and its debt holders. That is how these things work. And so you cannot pay those liabilities now that these additional debt instruments and preference shares and dividend paying instruments have created. And so how do you pay that? Well, one way of paying it is raising additional debt or equity through the debt capital markets or the equity capital markets. What does that mean? Now, when Michael Saylor or Strategy announces that they've done a fundraise, it sells out very quickly. Do you think that's because they're reaching out to all these retail investors and these retail investors are gobbling up this project? No, it is purchased by the financial industrial complex, and now it has full capture of this tool. Why would they want that tool to go bust? Because they have created the perfect tool for manipulating the short-term price of Bitcoin in its financial industrial complex alongside other tools. And if you can get it to have not enough cash to pay its debt liabilities, that is exactly what the IMF was created for. That's exactly what it was created for. So what's the second way that they could pay that additional liability? Well, they could increase revenue. So what did Strategy do? It leaked out that it's going to start paying yield and it would create a Bitcoin bank. And so what is a Bitcoin bank? Well, under the Trump administration, Saylor was pitching that there should be, the way you get Bitcoin adoption is by having banks adopt Bitcoin so that they can lever up those balance sheets. And therefore, we had the changes so that banks can now create paper Bitcoin. And that was a part of Michael Saylor's pitch of how to get Bitcoin adoption to the next level. So now we have equity capital markets, debt capital markets, full vassalization, and a business plan that is saying, and I'm not sure exactly what's going to happen, that they want to be a Bitcoin-backed bank, i.e. financial weapons of mass destruction. For those of you that are old enough to remember long-term capital management, it's getting closer and closer. What did that get? It got a government bailout because it was too big to fail. So you socialize the losses, privatize the gains. Now, people are speculating on whether this is going to be a government strategy. How did the government strategy work out during the 2008 global financial crisis? They hired BlackRock in order to determine which companies go down and gave everything to Jeffrey Epstein's banker, JP Morgan, took out Jeffrey Epstein's operation with like Lehman Brothers and Bear Stearns, or ones that he was working for previously, when he created this fake persona of being a wealthy financier when he was an intelligence op. And they gave the ETF department of Barclays to BlackRock, using BlackRock's advisory service at the Federal Reserve by printing money, making the taxpayer pay for it, and creating financial weapons of mass destruction. And so did it go to the government? No, it went to the banksters that were creating the mortgage-backed securities and the collateralized debt obligation and the credit default swaps. But what were the credit default swaps? They were meant to be the insurance for the system. But who owned the credit default swaps? BlackRock's pension funds and various other constructs of the financial industrial complex. And so rather than pensioners taking the hit, they used their political lobbying to own, the ETF department of Barclays iShares that gave them all these board seats in the financial industrial complex that they have right now. And they did it with your money through money printing because they are too big to fail. And so that's the second way that they can meet those obligations in the future. It is a tool for the financial industrial complex to centralize as much Bitcoin as possible. The more Bitcoin it gets in that wrapper, the more vassalized it is into the financial industrial complex. And people are falling for it. What else could you do? Well, the third way of making up for those additional obligations is selling Bitcoin. So that's beautiful, isn't it? So what did they pivot? They pivoted the terms and conditions saying that it was possible to sell Bitcoin to meet these obligations. What does that do? That creates the ability to utilize paper derivatives, options, financial weapons of mass destruction on strategy shares in order to crash the price so that when you want Bitcoin to be sold, you can sell some of that Bitcoin, which does what essentially Terra Luna did back in the 2021-2022 days for any of you that were around that back then. And you now have a mechanism for short-term manipulating the price of Bitcoin via a vehicle that is pushing out a narrative that they're taking on JP Morgan. They're taking on the banks. This is Vasilization 101 textbook, financial weapons of mass destruction, full subserviency to the financial industrial complex that Satoshi Nakamoto in his original block in 2009, where it was mined into the block, banks on the brink of financial disaster because of the 2008 financial crisis, while Israel was invading Gaza on the front page of that newspaper, it was mined into the block to remind us that this is a resistance against the 2008 global financial crisis with an open source code in order to resist against the money printers, the stock printers, the derivative printers, the bond printers, the crypto printers, the stablecoin printers. And so strategy is a full-blown financial industrial complex, financial weapon of mass destruction to centralize as much Bitcoin as possible so that it is fully submitted to those that are investing in those products. And those investors get to print the money to do it in the first place and can socialize the losses and privatize the gains. And if they want to wipe it out, crash the price of Bitcoin, send it into Chapter 11, and buy all that Bitcoin on the cheap. You think that there's a plan to back the dollar by Bitcoin, who's in charge? You think the government's in charge? The lobbies are in charge. The lobbies own the Federal Reserve. They're the shareholders of the Fed. They own the government. They own Senate. They own Congress. Through the military industrial complex and the deep state, they can blackmail judicial. That's what Jeffrey Epstein was about. Their whole mechanism is for control. Recognize that we are in a battle for self-custody versus control. That is the battle that we are in, and people don't recognize it because they're investing in the ones that are constructing the things that give more power to the financial industrial complex. How do they do it? Well, they use passive investment funds from your pension. You contribute to your insurance premiums. You contribute to your pension every single month. You put that in BlackRock Bitcoin ETF that gives more power to BlackRock. And then you also end up investing in strategy for tax-deferred income via some of these products as well. And what are they threatening him with right now? Inclusion or exclusion from the NASDAQ 100 index or the S&P 500 index, because no financial market is connected to reality. It is just connected to the ability to receive money from the money printer and get access to these flows of index fund capital that forces buying, which is why BlackRock took over Barclays iShares in the first place. And when they want to do that, they can use their derivatives market, which they're launching more and more products, their structured product market, their hedge funds, their control over media in order to push out narratives, their control algorithm of social media, and all the other financial weapons of mass destruction that the entire Bitcoin community that isn't switched on was engaging in, thinking that they were winning when they were giving more power to the very same attack vector. Hopefully, Bitcoin Hard Talk investors and people understand these attack vectors because they follow the money, not the narrative. They don't listen to the politicians. What else did we have today? Attack vector 3. Well, you know, the attack vector was if Tether isn't vassalized enough, it basically is now the largest Bitcoin private miner in the world. Now, that's good. It creates a resistance against the public miners that are all going public because they're not vassalized, because they're funded actually by Bitcoin, because they use the US government debt to buy Bitcoin with their yield. But the stablecoin through Tether creates an attack vector because you can have the run on the bank that happened to Silicon Valley Bank and happened to USD Circle previously. How do you resist against this? Now, remember, they did an attack on Bitfinex, which is the sister company of Tether. That was 119,000 Bitcoin attack. I became a shareholder, as I said, by supporting the victims of that hack. And where are those Bitcoins right now? Well, they belong to the shareholders and the victims. But what is the US government doing? They're confiscating it, and they're part of the US Bitcoin strategic reserves. And what happened as soon as the Trump administration came through? Well, we ended up with Genius Act to support stablecoins. And the person that worked under the PayPal mafia, remember, Palantir, that's doing all these military industrial complex AI weapons through Peter Thiel, and Elon Musk, that's getting all of the data for our social credit score, also had David Sachs, who was part of the PayPal mafia as well. And he brought in Bo Hines. Bo Hines joins Tether and leaves the White House right after creating Genius Act. What did Genius Act do? Well, it basically helped JP Morgan create a covert central bank digital currency, calling it a stable coin because they slipped into the Genius Act that if you have a banking license, you can use your reserves at the Fed to back the stable coin. And there are over $3 trillion of reserves. What else did it do? It said you can compete with other stable coins and pay yield on your stable coin. So you can become a collateralized debt obligation, and then you can pay that yield out to the investor. but only if you have a banking license. And then they create legislation saying you can hold bank on your balance sheet, and that can become part of your asset base in a fiat currency fractional reserve system. And so you have stablecoin issuers are now applying to become banks. One of the companies I invested in was Coinbase and Circle. They were originally Bitcoin companies. Now, because they were subservient to shareholders, they became a shitcoin casino. And then they launched stablecoins. And then they needed to maximize shareholder value. They took on all the Silicon Valley money. The PayPal mafias all came in. And now they're a public company. And in that public company, they're now applying to become a bank. You see the strategy. This is how the complex works. And so what happened? What happens in the Genius Act? It said, while pretending we're not going to have a central bank digital currency, but we don't want people using coin joins, which is how you anonymize private wallets when you hold them in self-custody. And we will take out the developers that created a coin join wallet called Samurai Wallet. And they're going down for 5 years right now. And not much is being talked about that. There's no pardon there. They pardoned Russ Albright because they wanted to confiscate the Bitcoin, like they confiscated the Bitfinex Bitcoin, like they just confiscated the Bitcoin from the victims of the scam in Cambodia that China's trying to return to victims. And America said they're on our balance sheet, they're our strategic reserves, rather than return them to victims. So the confiscation strategy is what they are using. But who controls the treasury? The banks, through the bank lobby. So it ain't going to be make America great again. It ain't going to be saving the dollar, because what do the banks want? We'll cover that more in the macro and geopolitical section. What else did they put in the Genius Act? Well, they want to discourage the use of unique wallets via hardware wallets, which are constructed where every time you make a transaction, it creates a new wallet so that you can only be seen for one transaction in this pseudonymous network. They want to make sure that doesn't happen within America. So what is really happening here? Is this the Trump administration ushering in the strategy of the financial industrial complex and the proof of weapons network that want to have stable coins owned by private corporate interests like JP Morgan and other players that they can bring into the network by taking them public, in order to use a gateway drug onto what they're going to be launching in Europe and everywhere else, a central bank digital currency, to vassalize those governments up to the private network via stablecoins integrated into Elon Musk's social credit score and Palantir's surveillance state. That they got $500 billion of Stargate capital in order to create and plug into Oracle to get that data. And that's what is happening right now. So they get to buy US Treasury yield. They get to buy Bitcoin with that. And who is the player that is ushering in all these Bitcoin Treasury companies and all these borrow against your Bitcoin? Well, of course, it is Cantor Fitzgerald. Cantor Fitzgerald, who launched a Bitcoin Treasury company with a Bitcoiner that got upset that I was talking about this, Jack Mallers. And what did his company do once he took the funding, once he did the partnership? Well, he launched Borrow Against Your Bitcoin. And so you can now put your Bitcoin in custody, borrow against it via Strike. And if the price gets manipulated down, you get margin called and lose your Bitcoin, while they're mining fiat currency via these network of financial institutions that are lending them money, which means that those organizations are subordinate to their shareholders and their debt holders. And so now you get more and more Bitcoin-backed loans. You get Cantor Fitzgerald custodying all of the US treasuries behind these stable coins. And what comes out afterwards this week? Attack Vector 3. The S&P, yes, our friends at the S&P, yes, the ones that were rating AAA ratings on the mortgage-backed securities and collateralized debt obligations during the 2008 financial crisis, which of course are independent actors, even though some of these credit rating agencies, via various ones that were weaponized, are owned by Morgan Stanley and JP Morgan. And so what did they do? They downgraded Tether in order to vassalize it into submission before we go to the next phase of the stablecoin strategy. So now Tether is now being graded with S&P, and it was graded as weak, saying that they had excess reserves held in gold and Bitcoin, while they are engaging in market manipulation through strategy, whilst vassalizing Jack Mallers into the network. And again, nothing of this is about personality. This is structural financial weapons of mass destruction that everyone was promoting this week, except for the Bitcoin Hard Talk listeners that knew a mile off what was happening. And so now they can crash the bond market in order to trigger mass withdrawals, just like they did when Operation Choke Point 2.0 took out Silicon Valley Bank. When Bill Ackman came on Spaces and said, we want the government to bail out the banks after Peter Thiel, yes, Peter Thiel came on Spaces telling all his portfolio companies to withdraw money from Silicon Valley Bank. And Silicon Valley Bank and Signature and Silvergate and Cross Tower, or whatever the other ones were, can't quite remember now, were all vassalized into the network and rolled up into JP Morgan and various other, put into submission by crashing the bond market in order to, and who had a bank account at Silicon Valley Bank? Circle did. And so the depeg happened where Circle's price depegged from the dollar based upon how much money was at Silicon Valley Bank. Now later, the FDIC came in, owned the bank, took over, gave it to their buddies, and then said, okay, we'll guarantee the money paid for by the taxpayer and money printing. And the Federal Reserve constructed another financial weapon of mass destruction in order to take, I think they issued about $650 billion in order to save the system. But banks in Credit Suisse and Morgan Stanley in Switzerland ended up merging, and they managed to use a debt instrument in order to socialize the losses and privatize the gain as well. So what do they want to do? When you dump a stable coin, what did we learn from Terra Luna? Well, it becomes a weapon of mass destruction when you back it by Bitcoin, because then you have to sell the Bitcoin to meet the liabilities, because those US treasuries are meant to be held to maturity. And if they're selling at a discount, that's how you took out Silicon Valley Bank. You sell it at a discount. Now you can no longer meet withdrawal demand. When you need to meet withdrawal demand, you sell some of your Bitcoin and you go through the cascading liquidation cycle of all the people that were borrowing against their Bitcoin, where they get margin called, and who ends up with all the Bitcoin in those treasury companies that essentially, if you want, go into Chapter 11, the lawyers spend them and give them to their VCs and all their buddy network. So what else did Strategy announce? More products. It's going to be offering yield, and it said that it's going to become a bank, just like Barry Silbert did with Genesis when it had its original Bitcoin kind of trust company, different, that depegged from the price of Bitcoin and started trading at a 50% discount to Bitcoin when before it was a premium. And all those companies that were offering yield, where did they get their yield? They got it from the discount and premium to that public company, GBTC, that Barry Silbert created. And then they used that to pay yield by arbitraging these financial weapons of mass destruction. When Terra Luna was taken out, that created cascading liquidations. They are constructing the exact same playbook at the socialize the losses and privatize the gain network. And they were offering, who was offering those Bitcoin-backed loans at the time? BlockFi, Celsius, and all the others. I've been to them many, many times. Vasilization 101. 3 attack vectors. This is Financial Industrial Complex 101, taught to you by somebody that used to work in investment banking, has seen it all, been there, done it, and it's nothing personal, as I said. So please don't take this personal. It is systemic. It is submission. It is blackmail networks. It is financial weapons of mass destruction, because first they try and groom you by allowing you to go public or allowing you to take some Silicon Valley money. Then they fund you and your growth, and you become subordinate them because you need the capital, and they lever you up. And then if you don't comply, they blackmail you and they weaponize all sorts of things, whether it be media, whether it be access to financial weapons, whether it be sex blackmail operations. This is what I was trying to explain. And so what I want to do right now is I created a nice AI summary that goes through two of those attack vectors, goes through the timeline so that you can recognize what's happening right in front of you right now, based, upon this using strategy and using Jeffrey Epstein and his connection to funding Bitcoin core developers. So you can see how the network works. Right.
Welcome back to the deep dive. Today, we are strapping in for what is really a high-velocity two-part investigation.
A really big one.
Yeah, we're looking at Bitcoin's relationship with the established global power structures.
And we're looking both backwards and forwards.
Exactly. We're going backward into the deep and, frankly, murky past of Bitcoin core funding. And then we're jumping right into the present.
To what looks like a very coordinated institutional pressure campaign.
Against MicroStrategy, or MSTR. Now, our sources for this deep dive are powerful. They're provocative. We're unpacking a detailed analysis from Simon Dixon.
He's a veteran investor, a real Bitcoin OG.
Mm-hmm.
His report covers the geopolitical and financial angles.
And we're also using the synthesis from Bitcoin University to help tie it all together. Our mission, as always, is to pull out the verified facts.
Right, the grounded structural implications from what can be, very sensational and complex narratives.
So what really stands out here?
I think it's how seamlessly these two things connect, the history and the present day. It just highlights this constant, fundamental tension.
That tension between what, exactly?
Now, on one side, you have Bitcoin. It's an infinite, decentralized asset. It's designed to be immune to capture.
By a nation or a corporation.
Exactly. And on the other side, you have this powerful, centralized financial industrial complex, the FIC.
And its goal?
It's always seeking to either manage or co-opt, or just neutralize any force that it can't outright crush. This is that story in action.
Okay, so let's unpack that past claim first, because it involves some verifiable details that are, frankly, pretty shocking.
It's a lot to take in.
It centers on new emails. These were released by the House Oversight Committee, and they detail Jeffrey Epstein's involvement with MIT.
Right, so what are the documented facts here? What was his actual financial role when it comes to MIT's digital currency initiative, the DCI?
Well, the connection point, the main one, is Junichi Ito.
He was the director of the MIT Media Lab at the time.
Yes, and the emails confirm that Epstein assisted Ito in funding the Media Lab.
And this is the crucial part. The Media Lab was the institutional home of the digital currency initiative,
whose stated goal, and this is documented, was to provide stable and sustainable funding for long-term Bitcoin core developers.
So this wasn't just some, general funding that went into a big pot.
Not at all. The source outlines a very specific moment. This is in 2015, right after the Bitcoin Foundation collapsed.
Which was its own big controversy.
Exactly, and it created a huge vacuum.
Right, and we have the email from Ito to Epstein. The title is Digital Currency Initiative.
And what does it say?
Ito explains how, after the foundation went bankrupt, all these different organizations were scrambling to take control of the developers.
The developers who were suddenly orphaned financially?
Right. And Ito's team, they secured gifts really quickly. He credits this fast movement for getting developers like Latimer, Gavin, and Corey to join the Media Lab.
And he called it what?
He called it a big win for us. And the email closes with this simple but very telling line to Epstein. It says, "Used gift funds to underwrite this, which allowed us to move quickly and win this round. Thanks."
Wow. Thanks. That confirms a deeply unsettling connection.
And there's more. We know an Epstein associate, Leon Black, was a major donor to the Media Lab.
And Epstein helped arrange that donation.
He did, and this happened even though MIT had its own explicit policies about, reputational risk for large anonymous donations.
They specifically said their comfort level was below $5 million a year.
Exactly. So this puts Epstein right in the room, orchestrating the money flow to the very institution that then secured foundational Bitcoin talent.
And we know Epstein was interested in the space himself.
Oh, absolutely. That's proven. He discussed Bitcoin with people like Brock Pierce way back in 2015.
Yeah.
He publicly praised it in 2017.
And he even discussed crypto tax and regulation with political actors, right, like Steve Bannon.
Yes, in 2018. So the interest was clearly there.
Okay, so this brings us to the pivotal question from the analysis. Given this compromised source of funding, did it actually work? Did this arrangement succeed in compromising Bitcoin's integrity? The protocol, the roadmap.
And this is where we have to be surgically precise. We have to separate the verifiable evidence from the powerful narrative that grew out of it.
Okay, so let's start with what is proven.
What is proven is the funding pipeline. Epstein facilitated money to the MIT Media Lab,
Which housed the DCI.
which then funded Bitcoin Core developers. That is a fact. And we also know that the DCI later pivoted.
Pivoted to what?
They started working on highly sensitive CBDC pilots, specifically Project Hamilton and Project Cedar.
So that creates a direct line, at least narratively, from Epstein to Bitcoin Core to state-backed digital currency.
That's the pipeline narrative. It's incredibly compelling.
But what about the compromise itself, the actual code?
That's the key. What is not proven, and the sources are very clear on this, is that Epstein or anyone directing him ever shaped Bitcoin's protocol.
So no influence on the block size debates, for example.
No. There is zero published evidence of direct technical influence on the code itself. None.
So if the code wasn't compromised, why did this narrative become so explosive? Why is it so persistent?
I think it's the moral contamination. It's a vector. It merges three facts that are all true.
Okay, what are they?
1, Epstein funded the institution. 2, the institution funded the developers. 3, that same institution later worked on the very antithesis of Bitcoin central bank digital currencies.
And that overlap just creates this perfect story.
A perfect conspiracy narrative. It's a guilty by association story that suggests the intent was always to co-opt the technology, even if the actual technical capture never happened. The reputational damage alone is the story.
All right, let's shift gears, moving from historical contamination to what feels like current financial warfare.
A very different battlefield.
Let's transition to the drama focused on MicroStrategy, MSTR, and these powerful institutions like JP Morgan and Morgan Stanley.
Simon Dixon's analysis here suggests a highly aggressive, coordinated institutional strategy is underway, like right now.
And he calls it a structural attack. So what's the central pressure point?
The pressure point is an MSCI consultation. It was announced on October 10th, 2025.
And MSCI, for anyone who doesn't know, they provide the critical global indices that all the big funds track.
Exactly. And they announced they are considering removing companies that hold 50% or more of their assets in digital commodities.
Which is, that is a direct shot at MicroStrategy.
It's the clearest possible target.
So what happens if they actually lose that index eligibility?
It's a disaster for them. That means losing mandated institutional passive investment flows.
Pension funds, ETFs that track the index?
All of them. They're forced to sell. It creates a massive overhang on the stock and huge reputational damage.
And the sources frame the timeline that follows this announcement as, what do they call it, an alleged kill shot?
A kill shot, yeah.
Yeah.
Executed by institutions over several months.
Okay, let's unpack that alleged timeline. When did the strategic pressure really begin?
Well, it started long before the index news, actually. Back in May of 2025, you have the notorious short seller Jim Chanos publicly announce his position.
Which was?
Long Bitcoin, short MSTR. And this was a very calculated move.
How so?
It's designed to sow strategic doubt. The message is, the asset is good, but the corporate wrapper holding it is bad.
Okay, so that sets the narrative. Then what?
Then, in July 2025, we see the real financial pressure start. JPM implements a firm-wide margin hike on MSTR shares.
And it was a big one.
Huge. They moved the required collateral from 50% to a really punitive 95%.
A 95% margin requirement? That makes the stock virtually untradeable for any leveraged fund.
It instantly drains liquidity. It puts immense pressure on any large speculators holding MSTR. You're squeezing the market months in advance.
And then things really started to accelerate around the MSCI news itself.
Right. So in August 2025, JPM was already releasing documents for structured products linked to BlackRock's spot Bitcoin ETF, Hypolecus.
So let me get this straight. You're setting the house on fire with the index risk. You're blocking the exits with the 95% margin hike.
Right.
And at the same time, you're opening a new, expensive hotel across the street, which is the IBIT structured notes.
That's a perfect analogy. And the coordination gets even tighter. Just 4 days after that October 10th MSCI note,
What happens?
Morgan Stanley, which is the former parent company of MSCI, files for its own IBIT-linked security.
So the timeline suggests one arm is creating the fear, the delisting risk, and the other arm is swiftly preparing the bank's own proprietary exit vehicle.
The bank-controlled structured notes, yes.
And according to the sources, this is where it all culminates. The kill shot allegedly happens on November 20th.
On that single day, November 20th, JPM took 2 very specific actions at the same time.
Okay.
First, they published the prospectus they needed to sell their IBIT-linked structured note. And second, they resurrected the 42-day-old MSCI note.
And they didn't just resurrect it.
No, they specifically highlighted the delisting risk to MSTR in their press materials.
Yeah.
The timing it's not random.
But let's play devil's advocate for a second. Are we sure this isn't just shrewd business, reacting to clear market signals?
That's the essential question for impartiality, right?
JPM and Morgan Stanley, they're always optimizing products. Is this truly manipulation, or is it just hyper-aggressive, sophisticated market timing?
The analysis argues it's the simultaneous nature of the events. Launching your own product on the exact same day you are screaming about your competitor's risk.
That crosses a line.
It crosses the line into what looks like engineered capital migration. The institutional pattern is clear. Use index fear to discredit a company like MSTR.
And then launch your own proprietary bank products, these IBIT notes, to capture the capital that's now fleeing.
Exactly. It's about engineering a migration of capital from a vehicle the FIC can't fully control, which is MSTR, into derivative products the FIC does control, the bank notes.
This alleged manipulation, then, brings us directly to Simon Dixon's core structural analysis.
It does. It's all about the tension between the infinite nature of Bitcoin and the finite nature of MSTR as a corporate proxy.
Right, and that structural analysis is really the foundation of the sources.
It is. The financial industrial complex controls corporations, not always by managing their day-to-day operations.
But by controlling their strategy.
Yes. Specifically through index structures, through credit windows, and crucially through debt, through their debt covenants.
And this is what Dixon calls vasilization.
Vasilization, yes. It implies a forced dependency on the system.
So how does MSTR's structure specifically make it a vassal?
Because MSTR is the finite vehicle. It has to operate on quarterly earnings. It has rigid debt maturities. It needs regular refinancing.
It's playing by Wall Street's rules.
It has to. Bitcoin, on the other hand, is the infinite game. It has no maturity date, no counterparty risk, no refinancing schedules.
And when you look at MSTR's balance sheet, that vulnerability is just laid bare.
Completely. The structural asymmetry is shocking. They have about $54 million in cash versus $700 million in annual financial obligations.
$700 million in obligations against $54 million in cash. That is a massive structural shortfall.
It forces their hand.
It absolutely forces them into one of two paths to service that debt.
Right. Either they sell Bitcoin, which would be market suicide for them,
or they raise more capital.
and every single time they raise more capital, they just increase their dependency on the FIC.
Whether it's through more debt covenants that restrict what they can do or more index dependence to make sure they have liquidity.
So the core thesis here is that MSTR is structurally unable to defeat the system because it's completely reliant on the system's tools to even function.
So the FIC doesn't actually benefit from MSTR collapsing entirely.
No, not at all.
They benefit most when MSTR stays alive, but as this highly leveraged proxy.
A proxy that allows the FIC to influence short-term Bitcoin market dynamics. They can create forced selling conditions, for example, using that finite vehicle.
That's the strategic endgame.
It is. Bitcoin itself cannot be disciplined or manipulated by fiat forces. But the corporate wrapper that's holding billions of dollars of Bitcoin, that can be disciplined.
And that's why the conflict is so asymmetrical.
The FIC just needs MSTR to exist as this instrument of short-term influence and as a capital migration vehicle.
And if we look for attempts at resistance, even those just reveal how deep this institutional web goes.
The sources bring up a great example, the case of Jack Mallers, the CEO of Strike.
He got debanked by JP Morgan.
Right, but then who did he partner with? Cantor Fitzgerald and Howard Lutnick.
And Lutnick is described in the sources as Epstein's neighbor for 20 years
Yeah.
and a figure who is deeply involved in those deep state institutional connections.
And this raises a profoundly important point. Cantor Fitzgerald also serves as the main custodian for all of Tether's vast holdings of U.S. Treasuries.
So the analysis suggests that trying to fight the financial industrial complex by using corporate wrappers or by just switching partners from JPM to Cantor Fitzgerald.
That is not true resistance.
Yeah.
It's just switching which highly centralized, interconnected institutional partner you happen to be dependent upon.
Which brings us all the way back to you, the listener. If all these corporate proxies are potentially vulnerable to this vassalization, what is the real form of resistance? What's available to the individual who's trying to get out of this finite game?
Well, the final synthesis, I think, is just clarity on what the battlefield actually is.
Okay.
While the short-term market will always be pressured by the FIC using these finite vehicles like MSTR, the long-term, multi-year trajectory of Bitcoin is ultimately unmanipulable.
The fiat markets, the central banks, they can only create short-term volatility and noise.
That's it.
So this structural reality, it recalibrates the entire battle. The real fight is not institutional versus institutional.
No. It is, as Simon Dixon outlines in his analysis, derivative, money, stock, crypto, and bond printers versus Bitcoin and self-custody.
We don't beat the FIC by investing in their products or by using their system's proxies.
You beat it by exiting the finite game entirely.
Absolutely. The FIC thrives on manipulating these finite games that have maturity dates and counterparty risks. Bitcoin rewards the infinite game players.
Those who prioritize structural independence. So I guess that leaves a provocative closing thought for you to explore.
Sit here.
If your goal is to win the long-term infinite game, is your most effective strategy just to exit the finite game entirely?
Meaning you prioritize self-custody of your assets.
And you actively avoid all of these Wall Street wrappers, whether that's MSCR shares or structured notes or any other form of institutional dependence. Is that the only real way to win?
What is commonly known, what is publicly known, and hopefully you can understand the whole purpose of this was to help people recognize that we had an attack trying to connect Jeffrey Epstein to Bitcoin core development. And anyone that doesn't understand this stuff will think that, Bitcoin of Jeffrey Epstein, at the same time as a coordinated attack from people that have historically attacked Bitcoin, like Barry Silbert, who's a long-term investor and will willingly buy back as much Bitcoin as it can get on the cheap in order to put as much fear, uncertainty, and doubt around Bitcoin while pushing Zcash, because they want you to sell your Bitcoin. And they weaponized just this week alone what I've been warning people about for a long, long time now. They weaponized strategy, they weaponized Tether, they weaponized Bitcoin-backed loans via Strike, and the financial industrial complex. They want to centralize as much Bitcoin as possible. Stable coins are the gateway drug to central bank digital currencies. So right in the beginning of this, we talked about the connections between CIA and Bitcoin. We said that the resistance was that it became open source and therefore there was no backdoor to it. But what did it become? It either became a honeypot, which is what most people are fearing. They're thinking it's going to suddenly swipe your Bitcoin, that there's a backdoor. That's the uneducated analysis. The reality is Bitcoin is a gateway drug to stablecoins and central bank digital currencies. And the people that you are potentially idolizing right now are the ones that are being utilized knowingly or unknowingly by the financial industrial complex in order to get you into that gateway drug, which means that it's easy. What is the solution here? You fight back with Bitcoin in self-custody. You boycott Bitcoin ETFs so that you don't empower BlackRock and the other FIC players. You boycott Bitcoin treasury companies, and you boycott Bitcoin-backed loans so that you don't get subjected to the margin calls. You don't use Bitcoin leverage so that you don't actually have any Bitcoin. You have just a financial weapon of mass destruction instead. And you'll sit back and relax as a long-term investor, owning more Bitcoin this month than the previous month, aligning with the people that want your Bitcoin getting it on the cheap when they do these manipulative short-term strategies, because you're never going to outtrade the financial industrial complex, but you can certainly invest in order to win. And that simplifies your life to focus on the more important things in life.